Hey, it's Rick. It's Saturday, November the 18th. Take a quick look at the market and also want to discuss the notion of support and resistance when support becomes resistance and vice versa. First off with the market, good week. Particularly on the left-hand side here, I've got the moving averages and their gains or loss for the week. The most notable thing to me is the stocks trading above their 40-week moving average is now at 66%. When we started the week, ended last Friday, it was at 41%. And stocks trading above their 200-day moving average has moved up from 34% to 45%. So what this is telling me is that there's much more breadth to the market. More stocks are participating, which is a really good thing because it has been somewhat dominated by the so-called Magnificent Seven. And now it's good to see that there's more breadth coming into the market. So I know in my preliminary scanning so far this weekend, I'm coming across a lot more good potential setups for the next week. Small caps had the best week of the other averages, up 5.4%. Mid caps up 4%. The equal weight our S&P 500 was up 3.3, whereas the spiders themselves was up 2.3. So again, this is an indication of more breadth coming into the market, more stocks participating. So we had this big gap up after the release of the Consumer Price Information Index on Tuesday, closed right near the highs of the day, and surprisingly stayed around here all for the rest of the week, which is a good sign. Our model is turned green. I put it light green because this. I'm going to take these other moving averages off here. We're above the 8-day, 10-day, above the 20-day, and above the 50-day, which causes the model to go green. However, I won't put it as dark green until this 50-day moving average starts to curl upwards. And then if that happens, I suspect that will happen this week, although we have Thanksgiving week. So it'll be a light trading week, but then I'll get more bullish and take my position size up a bit. So where we've come up to here is kind of interesting. If I look back to the left on this chart, we came down to this area, bounced off it, came back down to it, but then went through this area. So if I put a box in here, if I just draw sort of an area of support and resistance in here, looks about like that. So to my eye, we've came down. This was support, and then now that we've broken through it and traded well below it, this is now going to be a resistance area. So I'm not going to get uber bullish until we actually clear this area. And if we roll over and head back down, it may well need to do that for a week or two and then come back up to retest it. So let's just see how this area here has behaved in the past. Just going to scrunch this up a bit. And if I just extend this, I'm going to extend it out here and take a look. I know it's probably a little hard to see on the screen, but once before we had this move up here from late December, beginning of the year up to in March or end of January, and then we pulled back down into this zone here and then bounced off it. So that was an indication there that this is a support area or an important area. Then it came back down and it crashed right through it. So then what happens now when it comes back up? So it comes back right back up to that area and then falls back again, can't get through. And then we come back up to the area, actually clear it just a little bit, but that doesn't last long, and we come back down again. Comes back up into the same zone again, and then can't make it through. So there's clearly this is an important level by the big, huge market participants. So finally in early June, we actually get through. We clear this area by some amount. So now the whole notion of this was resistance, popular notion is that this now becomes support. So it shouldn't go through here. So let's see what happened. It comes up, comes down, actually ticks through it a tiny bit for one day, and then right back out of it. And then the market actually ripped higher from June and July. And then in August, it started to come back down. So where did it stop? Stopped right in this zone again. And then bounced up. And then down, but then crashed through it. Okay, so now this area that was support is no longer support. It's going to become a resistance area. And that's where we find ourselves today. So how does this impact my decision making? So even if we were to mush around here for the next 2 or 3 days, by the time we drop off, we go back 50 days, we're going to drop off, where 50 days would be somewhere in here. We're going to drop a few of these days off. This indicator is going to, or the 50-day moving average is going to start to curl up. Well, if the price of the RSP doesn't get above 146.20, I'm not going to get uber bullish yet and increase my position size, because this could very easily float around here and then come right back down. So I'm bullish. I've stepped up my position sizing, but not to the full extent until we get clear evidence that we're going through here. So this is how I sort of approach support and resistance from a market index level. When you look at this chart, if I draw another, where's the next obvious level of resistance is this double top. So how does this affect my my thinking? If we actually come through here, I'm going to be uber bullish all the way up. But do you think I'm going to be like fully on margin and getting super aggressive if, as, and when we get into this area here? No, I'm probably going to begin to get a little more cautious until I get some evidence that's going to plow right straight through that and keep on going. Does that might mean I might miss out on a couple of things? Sure, absolutely. But do I really care? Because we're going to be back into a rip-roaring market. So we'll make that up in no time. So I expect going forward, I don't know when this will take place, probably before the end of the year, maybe certainly by mid-January. We're going to be testing these levels, hopefully. And then, say we'll be guided accordingly. I use one more thing to sort of help me determine where to get bullish and where not, and where I should start to get a little more cautious. And I've talked about this very briefly in one of the previous videos, and that's the notion of an anchored volume weighted moving average price. And I like to anchor them at an obvious high and an obvious low, and I'll just plug those in and show you what it looks like. So we had a high back here on February the 2nd. So if I plot in an anchored VWAP from that date, you can see we're right about there. So that's kind of interesting. I like it to be in a stock or in an index if it's trading above its volume weighted moving average. So same thing if we go to the low, which is here, and we draw another one from the, well, we don't know it's the low until, 5, 6, 7 days afterwards, obviously, but so now we would have known that. And sure enough, it comes to exactly the same spot. So this again is leading me to think that this whole area in here between 146 and 145-ish is a really important area for the big, huge money managers and institutions. So I'm looking for a clear sense of direction from them as to whether they're buyers or sellers in this range before I get, let's say, uber bullish. So hopefully that helps. I would encourage you to plot these on your charts. They works on all time frames. I find the daily works great, but even a weekly chart probably even works better from a more macro level if you're a longer term investor. Okay, that's sort of a wrap for the weekend. I'm going to do my scanning and see what happens. I'm still fairly light. I think I only have 3 positions, 45% invested, so I'm still being a little cautious. But hopefully we can start stepping it up next week. Okay, that's it. Cheers.